The US Treasury has released its 2023 DeFi Illegal Financial Risk Assessment, marking the first global assessment of illegal financial risks in decentralized finance. The DeFi sector is generally considered an indicator of industry prosperity, based on the signs of its awakening. Coupled with the recent strength of the market, one can indeed slowly feel the warmth of the industry. Each significant upgrade of Ethereum attracts a lot of attention. The future direction of Ethereum's development will be to establish a more decentralized, secure, and efficient blockchain ecosystem. Web3 Weekly News Digest. We'll take a tour of these industry hot topics that are currently making waves. On April 6, 2023, the United States Department of Treasury released an illegal financial risk assessment of DeFi for the year 2023 Eastern Standard Time. This marks the world's first legal financial risk assessment of decentralized finance. First, the operating mechanism of DeFi platforms and the surrounding ecosystem are introduced. The challenges DeFi presents to anti-money laundering and counterterrorism financing (AML, CFT) are outlined. In the United States, the Bank Secrecy Act (BSA) and related regulations impose obligations on financial institutions to assist U.S. government agencies in detecting and preventing money laundering, and some DeFi services may potentially avoid AML, CFT obligations through decentralization. The actual degree of decentralization for so-called decentralized services is debatable given the fact and circumstances. The report suggests that the existing AML, CFT regulatory framework in the United States and the gradual implementation of AML, CFT standards for virtual assets have to some extent addressed identified vulnerabilities. The report also offers some risk mitigating recommendations, such as strengthening AML, CFT regulation and enforcement in the United States to increase virtual asset companies' compliance with BSA obligations, proposing further regulatory actions and issuing more guidance. Finally, the article notes that the U.S. government will continue to study and collaborate with the private sector to support an understanding of the DeFi ecosystem's development and understand how these developments affect addressing the threats, vulnerabilities, and mitigation measures against illegal financial risks. Overall, the Treasury's risk assessment of DeFi focused on the risks associated with AML, CFT. The report's language is more educational and exploratory and regulatory, reflecting a relatively open attitude. This report is also a response to President Biden's executive order on responsible development of digital assets on March 9, 2022. As the influence of the cryptocurrency industry continues to grow and more industries participate, regulatory oversight of it, especially in the United States, will inevitably increase. Like any emerging industry, the cryptocurrency industry will gradually move from its Wild West phase towards maturity and stability. This week, DTC experienced a slight decline followed by a quick rebound. Overall, since the last significant rise, it has entered consolidation, and as previously mentioned, it will take some time before the trend becomes clear. Judging from the market, there may be a small wave of downward trends after the cool down, but the overall trend is gradually becoming optimistic based on the robustness of the market and the situation of its development. In particular, with the countdown to the Shanghai upgrade for ETH, the whole market is eagerly anticipating its trend. As Hellman mentioned at the beginning of the year, the withdrawal pressure on ETH should not be significant, because the rising price actually increases the willingness to withdraw. Meanwhile, Lido predicts that the withdrawal speed for Ethereum, for users holding less than 1,000 steth, the withdrawal request can be completed in as fast as 1 day, and for small withdrawal amounts, the queue time will be much shorter. Moreover, from Beacon Cha. It can be seen that the number of active validators and staked ETH is trending down from the overall situation. It is highly likely that there will be a downward trend at first, but the extent should not be exaggerated. After all, major investors are unlikely to let go of their optimistic ecosystem easily. The Shanghai upgrade is good news for the entire ecosystem and related derivative industries such as LSD, and IGM layer are highly valued. Therefore, the overall trend of ETH will not be affected significantly, and even if it falls, it will rebound later. Looking at root data, March has the fewest financing times since the beginning of 2023. The infrastructure sector still has the highest financing ratio, and the main focus of this quarter has been on infrastructure construction. Since the beginning of the year, in particular, the ZK infrastructure sector is becoming increasingly prominent. SEFI, after undergoing a major regulatory crackdown in February, is no longer highly favored by capital. In addition, all other types of financing have experienced varying degrees of declines, with GAMAFI and NFT suffering the most. DeFi is relatively slowly rising due to the overall market environment. Indeed, it can be observed that Ethereum still has the most projects in its ecosystem, with the majority of blockchains having DeFi projects as their largest sector. According to DappRadar's Q1 2023 report, the total value locked TVL in DeFi reached its highest point of $83.3 billion since Q2 2022, reflecting a growth of 37.44%. The DeFi sector has often been viewed as a barometer of the industry's overall health and growth potential. The recent awakening of DeFi and the continued growth of TVL is indeed a positive sign for the industry, especially with the recent market resilience. It seems that the industry is slowly but surely picking up momentum, and this is something to be optimistic about. The Ethereum AIP1 proposal highlights criticisms of the transparency of foundation management. On April 1st, the Arbitrum community initiated Arbitrum Improvement Proposal 1 AIP-1, which proposes the introduction of a decentralized autonomous organization DAO called Arbitrum DAO. This organization would be managed by ARB holders and would be serviced and governed by the Arbitrum Foundation in the Cayman Islands, with the goal of promoting growth and development of the Arbitrum ecosystem. According to the token economics model disclosed by the project team at the time of the airdrop, 42.78% of the tokens were supposed to be allocated to the community treasury of Arbitrum DAO. However, under AIP1, 750 million ARB tokens originally intended for the community treasury may be diverted to the foundation according to the original token economics model. The proposal has not yet been approved, but nearly 700 million ARB tokens have been received. As of now, 75% of community members have voted against the proposal. What is more criticized is that on-chain data shows that the Arbitrum Foundation transferred 50 million ARB tokens, leading many to doubt that the foundation has cashed out too early. Since the event began, the lowest price of ARB dropped by 20% if decentralization is claimed. Transparency and democracy should be achieved. Such a unilateral and covert move is not healthy for the ecosystem. AIP-1 means a setback in the current state of community governance. This event reveals a complexity and divergence of blockchain governance mechanisms. Although the establishment of Arbitrum DAO is intended to promote growth and development of the ecosystem, its proposal has raised serious questions and concerns among community members about major fund diversions. The fairness, transparency, and democracy of governance mechanisms are core issues of concern for community members, and it is hoped that this event will serve as a warning to all ecosystems. Bluebird turning to Doge. Elon ignites a frenzy of altcoins again. On April 4th, Musk changed Twitter's logo from a bluebird to a Shiba Inu icon and then tweeted about Dogecoin, causing its price to rise by as much as 30%. However, after the logo was changed back to its original form, the price dropped by 16%. During this process, two of the top 5 Dogecoin holders, who are whales, sold 1.4 billion Doge, approximately $121 million. It's amazing how much influence those in positions of power have, as even a casual mention of a project can cause significant changes in the market. It is important for people to remain rational when dealing with these types of projects. On April 4th, Layer 0 Labs, the developer of the interoperable blockchain protocol Layer 0, completed a $120 million Series B financing at a valuation of $3 billion. With participation from A16Z Crypto, Sequoia Capital, Circle Ventures, Samsung Next, OpenSea, and Christie's, among others. Prior to this, the company had completed a $135 million financing round at a $1 billion valuation, led by FTX Ventures, Sequoia Capital, and A16C, following the bankruptcy of FTX. The company repurchased 100% of the shares held by FTX, FTX Ventures, and Alameda. Layer 0 currently integrates DeFi protocols such as SushiSwap, Hashflow, Angle Protocol, and LiquidSwap. Astria has raised $5.5 million in seed funding. The financing round was led by Maven 11, with participation from 1KX, Delphi Digital, Lemniscap, Figment Capital, Nurikabe, Anagram, Robot Ventures, and Bree VC, among others. Astria's primary function is to replace centralized sequencers, allowing many aggregators to share a decentralized sequencer network that is simple and can be joined without permission. Initially, it mainly serves Celestia, but in the future, this business model may involve the ZK sector.